Most traders think that if you're not trading, you're not making progress. I didn't place a single trade last week, and that puts me ahead of most retail traders. Welcome back to Real Trading Journey. In this update, I'm going to talk you through the setups that I was looking at in Great British Pound USD and USD Swiss franc. I'm going to talk to you about why I stayed flat and what the big lessons were from last week. This isn't about chasing fast profits. This is about patience, discipline, and following the process. The daily chart gave me a nice bearish signal and the setup looked good at first glance. But here's where the process kicked in. We had non-farm payrolls at the end of the week. The jobs data came in weaker than expected, which completely flipped the sentiment against the dollar. If I'd have jumped in before non-farm payrolls, I'd have been fighting against the data. That's the first lesson. No matter how good the technicals look, if the fundamentals line up against you, you're forcing it. And by staying flat, I avoided what would have been a losing trade. This is important. Being flat is not doing nothing. Being flat means I didn't give my money back to the market. And the truth is, most retail traders lose because they feel like they have to always be in a position. Sitting out put me ahead. The second setup I was watching was USD Swiss franc. The plan was clear. I wanted to see a pullback into 79.55 and then give me a bearish confirmation on the 1 hour chart. That confirmation could have been a rejection wick or a bearish engulfing candle or a failed retest that gave me a lower high. The pullback happened, but the way it came in was too strong. Buyers were aggressive and there was no bearish confirmation at all. And this is where patience comes in. Just because price touches a level doesn't mean it's an entry. Without confirmation, the setup isn't valid, so I stayed flat. That's 2 trades I avoided last week, not because my ideas were bad, but because the signal didn't line up. And that's the difference between a trading plan and chasing the markets. I want to touch on something that doesn't get talked about enough. Last week I didn't place a single trade. It does feel uncomfortable. Sometimes I question myself, am I doing enough or am I missing opportunities? But the reality is, if I'm not trading, I am actually still trading. I'm managing to keep the equity curve flat and not losing money, giving money back to the markets. Think about it, if I'd have taken a trade last week, I'd be sitting here telling everybody about the loss that I made, rather than preserving capital to move forward. Institutes trade like this. Swing traders don't take 20 to 30 trades a month. They wait for a trade and a good setup before they convict it with high risk to make sure they make big reward. One thing I've been reflecting on is trade frequency versus risk. If I'm only taking 3 to 5 trades in a month, it makes sense to increase risk per trade when I do pull the trigger. But, and this is the key, I only want to risk bigger on A+ setups, where the daily price action, fundamentals and sentiment all line up and I've got clean confirmation on the 1 hour chart. That way I can afford to be patient, because when the trade does set up, it matters. That's a much better model for me than trading often with small risk and getting chopped up. So last week was about patience and discipline, and that's a win for itself. Looking ahead into next week, I've got my eyes on USD CAD, daily chart starting to show signs of strength. CAD still has a headwind and I'll be watching for bullish confirmation to get long. I'll update you as it plays out. As always, it's about discipline, patience and following the process.